Good afternoon, everyone. Welcome to Thai Union's Analyst meeting for the third quarter of 2025 results announcement. My name is Walanya Lijatulong, and I will be your MC today. First of all, I would like to introduce our key speakers. First, Khun Thiraphong Chansiri, President and CEO. Khun Lodovik Garnier, our Group CFO. And Khun Pinyada Sangsakdahan, Head of Investor Relations. Today's session will take around 1.5 hours, including Q&A session, and followed by a 10-minute break before we begin the TFM session. Without further ado, I would like to invite Khun Thiraphong to begin the presentation.
Hello to all of the analysts and the financial institutions who are joining us today. Today, we would like to share the results for the third quarter for this year. And we'd like to tell you that overall, it has been a quarter that the management is quite satisfied with, even though compared to last year, it may be a bit lower than the results from that period, but compared to the last quarter, we are seeing signs of development in a positive trend. And this is especially true for the revenue. It might have gone down by 1%, but if we do not include the foreign exchange impact, then you can see that there is growth of 1%. And this is the first time that we've seen growth in terms of organic growth. And as for the margin, this is one thing that I believe is something that we continue to do well in. It's at about 19%. The transformation program that we have in place are going according to plan, whether it's our Sonar project or our Tailwind project. Aside from that, as we mentioned last time, the cost for Sonar, the Sonar project, will end at the end of this year, and we will see a reduction in the fees increasingly in the next year. And as for Mitsubishi, their general offer, you probably all know that the program that they had launched in the 2 past months, it was unsuccessful, mostly due to the price that was offered. It was not as appealing as we had hoped for the shareholders to want to sell their shares to Mitsubishi. So far today, I have no other special updates for you. And of course, this program, they continue to pursue it, but the timing, we have no clarity at the moment there. They are working internally on this, and they need to hold discussions within their board. And what's important is that it is an ongoing process. On the next page, you will see, we take a look at the numbers. In the third quarter, our sales is at 34.5 billion Thai baht. And this is mostly growth from the ambient segment, especially in Europe, which has led to increasing sales for us. And the gross margin is at 19%. And overall, the business that has had great performance is the feed business. And this is a business that has a high growth rate in our business at the moment. Has reached an all-time high, whether it's the margin, the net profit, or other figures. And this is a business where we are seeing strong performance results, and the trend continues upward. It's a bright future for the business, and I'm sure that Thai Union Feedmill will provide more details for you. It's another growth driver. We're also looking at Indonesia, which we have invested in already. And as for the pet food business, it is also very strong, even though the margin might seem to have dropped a bit, but it is still a business that has created sales revenue for us, profit for us. If you look at the volume growth, even though it has not been according to our plan, it is still a double-digit growth, and we continue to see strong growth in that area. If we take a look at the adjusted operating profit, you can see that it is at 2 billion Thai baht, a little less from last year. And the adjusted net profit is 1.5 billion Thai baht, 7.2% drop year on year. But overall, I believe that we are quite satisfied to a certain degree. We have been successful in our management efforts, and we have been facing a lot of volatility, whether it's the tariffs or other impacts. On the next page, you can see the net profit that has softened compared to the adjusted. It's gone down by 7%. If we compare it to the reported net profit, it's gone down by 6.8%. And this is mostly due to the drop in the operating profit. And we have a forex gain that has helped a bit, as well as other factors. There isn't anything that you need to be concerned about or anything that is very significant. And next, we take a look at the solar project. The first 9 months, we have achieved savings at $12 million compared to our target for the whole year of $50 million. And this is something that we are confident to say that we are delivering the savings that we had as our target. The project tailwind, the OP uplift, we have achieved to $14 million at the moment. And so Project Tailwind is also in line with the plan that we put in place. So there is nothing to be concerned about here. The Tailwind project will continue on until the middle of next year. It will continue on until 2027 in April. And we still have time, more than 12 months, for this to play out. Aside from this, the cost reset program for Thai Union is something that we have put in place and we are taking seriously. It's cost reduction, it's SG&A, and it also involves capex control. And this is what we are doing to make our balance sheet and our cost competitiveness improve continuously. And this is what our management team is placing great emphasis on. And on the next page, you can see that in the details, whether it's the general offer for Mitsubishi, even though it was unsuccessful, nonetheless, our collaboration continues on with Mitsubishi, whether it's through frozen shrimp, chilled salmon, pet food, and so on. Our teams continue to work together. Aside from that, I would like to share other updates with you. Our ratings are maintained at A+, and this demonstrates that we have issued bonds at 1.7 billion Thai baht. It was very successful. The interest rate that we have received is in a level that is quite low and is a satisfactory low level. In addition to this, we have also received various awards, multiple awards, whether it's the Adam Smith Award for Asia, and most recently, we have to say thank you to the Analyst Association for voting for us. And they're going to announce it tomorrow, but they said that we could share this in the meeting today. We're allowed to share it. We have more than last year. We have one more award than we got last year, which is outstanding. Aside from outstanding CEO and outstanding CFO, we also have the outstanding IR team. So we would like to thank the analysts once again for the confidence that you have in us. And Feedmill also received many awards as well. They received the Innovative Company Awards from ZET, and they also received the Top Senior CEO from the Econ Mass event. And this is another award that, again, was voted on by financial institutions. And Lastly, what I'd like to share with you for my part is about the Blue Finance. We mentioned that we launched this and the details about the interest you can see, whether it's 1.7% for 4 years, 2.2% for 7 years, and 2.46% for 10 years. And this is something that we are very happy with, and our goal to have blue financing at more than 75% by the year 2025. We have achieved more than our target. It's more than 80%. And in the next 2 years, we expect to have a refinancing loan that will be a blue finance. And so that is what I would like to share with all of you today. And in the details, Ludovic will be the one to provide more information for you. Thank you.
Thank you, Khun Chapong, and very happy to be with you this afternoon. As usual, we will start with a 5 years picture. So here a few things I think for you to keep in mind, and I think Khun Chapong mentioned this one. Very happy to see that we get back to organic growth this quarter. In Q1 and Q2, our organic growth was declining a bit, but here we are back to growth. The GP margin also 19%, even if it is declining a bit compared to last year, I think it's moving in the right direction. Since the beginning of the year, the gross profit margin is always very close to 19%. Okay, and I think this is a very strong achievement, especially in this time where we have so much pressure coming from the USD or also coming from the US tariff. So overall, very happy with this picture. Just try to focus on the top line. So here we have in dark blue the organic growth and light blue the reported growth, the FX translation, sorry. So here overall our top line looks decreasing by 1%. But if you remove the FX, again this quarter, the FX impact is negative by 2.8, then the organic growth is 1.8. So it's not yet huge. Still, we are very happy, and I think it's a very positive development. One thing also I want to draw your attention to is on the volume. Okay, we have a 3 or 4% volume growth in Q3, mostly coming from the feed business. As Khun Chapong mentioned, our feed business is doing extremely well. As usual, you have TFM analyst meeting right after the one from TU. Please stay. It's a very booming business for the time being. Just a quick overview by category. In terms of ambient, the reported sales declining by 3.8%, mostly coming from the FX. The volume are almost flat, but then we are facing also softer demand from the US private label retailers. But in Europe, we have been increasing our volumes. One thing I want you to keep in mind is right now we have many customers in the US, they are still in the wait and see attitude. Okay, you know there is a decision from the Supreme Court to come soon. We don't have a lot of hope behind this one yet. Some people are waiting what is happening. And also I'm sure you heard at the beginning of last week that President Trump negotiating some new trade agreement with Thailand, and there is some discussion potentially to remove tuna from the 19% tariff. It's not confirmed. At this stage, it's only an MOU. It will have to be confirmed, so we do remain very careful. But of course, our customers, they know that. Okay, so when they know that there is so many uncertainties, sometimes they just prefer to wait and see. Opposite situation for the frozen. The frozen sales here are growing by 5%. Khun Kwan, we elaborate, but I think overall we have many segments in the frozen business who are doing well, and especially the gross profit margin is very attractive for this quarter within the frozen. Pet care. Pet care also is growing by 6% in Thai baht. If we were considering the USD sales, then the growth would be more 13 to 14%. So again, very happy with the pet care development over the quarters. This is really growing back to growth, and we want these BU to deliver much more in terms of growth compared to the others. So I think this is also a positive sign for you. In terms of raw material prices, we have been facing a bit of inflation. Okay, you can see the tuna prices went up to 550, increasing by 10% compared to last year and increasing by 2.6% quarter on quarter. That was expected. We told you at the end of Q2 we're expecting a bit of inflation to come in Q3 and also in Q4. But overall, no surprise on this one, but still a bit of inflation compared to last year. In terms of shrimps, also we are facing some inflation, 153 Thai baht for 1 kg. So here again a bit of pressure, but nothing exceptional on the shrimps. There is one anomaly here, which is the salmon price. The salmon price at 69 NOK is extremely low. Okay, and of course this is positive for us. We have different businesses which are exposed to the salmon price. And here we are fully benefiting from this one, especially in the frozen business. So overall, no big warning on this one. On the FX, we are kind of the same situation since the beginning of the year. We have been facing some constant appreciation of the Thai baht versus USD and all the other currencies. If you look year on year, the USD has been depreciating by 7.2% versus Thai baht. So this is massive. The euro by 1.3, so this is more reasonable. The GBP by 3.7, and then the yen by 6%. Okay, so we have been facing all along the year some very significant changes coming from the FX. Of course, this is penalizing us for our top line and also for our bottom line. However, for you to keep in mind, we are using some very conservative hedging strategies. Okay, so the vast majority of transactions are being hedged. So we are not fully impacted by that. Our hedging is preventing us from losing too much on this part. Quick overview on the ratio. I think first of all, I will talk about the inventories and the net working capital. Here, I think the situation is improving. Overall, our inventory stands at 45 billion baht or 152 days. It's decreasing a bit compared to the previous quarters. It's moving in the right direction. The net working capital also stands at 133 days, and I think overall we see some gradual improvement. The idea for us is to continue in that direction and to reduce further in the next quarters. In terms of net debt to EBITDA, you have seen some increase. We had 4.8. We told you because of the share buyback, also because in Q4 we did convert the PERP into traditional funding. We told you that we were expecting a growth to happen. Okay, and we told you also that in H2 we see some kind of plateau. Okay, some plateau around this level of 4.7, 4.8. We told you also that next year the priority will be to be put on deleveraging the company, no more share buyback, and really generating some cash flow and improving this net debt to EBITDA to get back to our target range, which is 3.5 to 4, as quickly as possible. In terms of net debt to equity, we are at 1.1 in the high range of our guidance. Again, mostly explained by the share buyback program. But overall, very strong balance sheet. I think there is no concern on that. Quick overview of our net debt. Our net debt has been increasing in Q3, so from 53 billion baht at the beginning of the year to 59 billion baht. The key drivers between the two, we are quite happy regarding our free cash flow generation. We have 4.1 billion baht of free cash flow over 9 months. The EBITDA is slightly exceeding 9 billion baht. This is okay. The net working capital, mostly because of the raw material increase, has been increasing by 2 billion baht. The capex are fully aligned with our guidance at 2.7. But overall, we told you we are not happy with our cash flow generation in Q1. Now, since Q2 and also in Q3, the situation has been really improving. Okay, and we do expect also to be in the same direction in Q4. Of course, we have been doing some investment and some financing activities. Over the 9 months, we did pay for the dividend, and we had also the share buyback for 4.3 billion baht. So these are the key drivers. One thing also I want to highlight here is the cost of debt. Okay, the cost of debt last year on average was around 3.65%, and now moving this year to 3.45%. So I think also it's moving in the right direction. Quick focus also, and Khun Chirapong mentioned this one, we have been doing a lot of refinancing. At the beginning of the year, we told you we have a very heavy agenda in terms of refinancing in 2025. We told you at the beginning of the year we did a 5 billion baht with ADB. You know already this one. So here we show you what we did in Q3. We did a blue refinancing by 19 billion baht. And we did a combination this time of loans and bonds. Okay, so 10 billion baht for the loans and 9 billion baht for the bonds. Again, we are doing blue bonds, we are doing SLL. We continue doing the same thing and scaling up compared to what we've been doing in the past. We were very positively surprised with, again, the success of these transactions. Now we have quite a good track record from all the banks and a lot of excitement. We can see here we are exactly where they want to invest. Okay, so when we do launch this kind of project, we can deliver a lot of success. And finally, the amount we were able to refinance was higher compared to our expectation. Okay, and the impact from this, we do expect there will be some positive impact, mostly next year in our finance cost. And we do expect our finance cost to be more in the range of 3% in the next years to come. Okay, again, a lot of credit to our treasury team, Yongyut, who is here also, a lot of success on this one, and we want to continue in this direction. We do really have a lot of recognition from that, from all the bankers. There are some bankers here in the room today. Very strong recognition from that, and I think we want to continue in that direction. Another good news I wanted to share with you is regarding to the Pillar 2, the minimum tax. At the beginning of the year, if you remember, we told you a few things. We told you, first of all, the key challenge for us is Thailand. Okay, in Thailand, we are exporting 90% of our product. We are benefiting from very positive and very favorable tax scheme. Okay, you know, the whole idea behind this Pillar 2 is to get to a minimum tax rate of 15%. In Thailand, we are quite far away from this rate. So at the beginning of the year, we told you we're expecting the impact to be around 250 million baht for the whole year. Okay, we have been revising down in Q2 and again in Q3. Okay, in Q2 we told you between 100 and 150. Now it will be very likely slightly below 100. Okay, the key explanation from that, there are multiple explanations. The first one is our profit is a bit lower compared to expectation, which is not a good reason, but we have to acknowledge that overall our performance is not in line with our guidance. That's point number one. Point number two is to say also the tax expense is a bit higher compared to expectation. We had in some businesses in Thailand, some BOI coming to maturity, coming to expiration, and I think we did not really budget in the right way for that. And this is why our ETR, our effective tax rate, is a bit higher compared to our expectation. So lower profit and ETR, which is a bit higher. And this is why we do believe now for the full year, the impact to be more in the range of 100 million baht. Okay, for your information, this is a very dynamic calculation. It's a very technical one. The first time we're doing this, so we miss a bit of background. Okay, so it's a very dynamic calculation. We are also considering few options for the end of the year where potentially we could reduce compared to the 100 million impact, this impact, but this is still a point we are discussing right now with our advisors and auditors. But the one thing for you to keep in mind is the impact will be lower compared to our initial expectation. I think this is very positive news. How sustainable will it be for 26 and the years after? I would expect the impact for the next years to increase. Why? Because we do expect our profit in Thailand to increase, and we do expect that we'll benefit again from all the BOI incentive schemes. Okay, so don't take it for granted that forever it will be this amount of 100 million baht. But I think it's a very positive development. And now we'll hand over to Khun Kwan for the view by BU.
Thank you, Khun Ludo.
Hello everyone, I would like to update you on our by business category. You can see that in the 9 months that have passed in this year, we have earned about altogether, you can see it's over 90 billion Thai baht in the sales contribution for the ambient to the value added. We have increased contribution from value added and from the pet care. The 9 months, ambient has a group profit margin at 20.3% gross profit margin, and our guidance was 20 to 22%. Roasting business is 12.7%, 12.7% gross profit margin. For pet care, it's at 25.3% for gross profit margin, and the range was at 23 to 25%, and for the value-added business, for the 9 months, it's at 26.6% gross profit margin, and we were targeting more than 25%. And on the next page, you can see the third quarter for the ambient business. For the canned goods, our sales have gone down compared to the quarter, same quarter in the year before. This is because of the FX translation, as Ludo explained earlier. If we take a look at the sales volume, you can see that the sales have gone down a little bit by 0.6% year on year. This decline, the main reason is because the demand in the US for OEM customers. And the second reason is for the high baseline in the Middle East region. In the third quarter for 2024, it was a high baseline for us. This also includes the third quarter and fourth September this year. We have a postponement in shipments from OEM customers in the Middle East. Nonetheless, if we take a look at the OEM in Europe, you can see that in Europe, the demand has increased, especially from Germany. And as for our branded business, our branded customers, the volume remains solid, and this reflects our marketing and promotion that we continue to implement, and we informed you of that earlier. The gross profit margin is at 19.4%, down 0.7%. And the main reason for this is the cost that we have absorbed in terms of the US tariff and the pricing. We are not able to pass this through 100% just yet, so that's why we have an impact in this quarter. On the next page, the 9 months for the ambient business, we have a drop in the sales. You can see 7.3% drop year on year, and this is because of the FX impact. And we have a sales volume that has gone down by about 3%. The main reason is because of the OEM customers who are waiting to see due to the uncertainty of the US tariffs in the past period. They were waiting to see what would happen, and the sales volume in the US has gone down. And this is offsetting some of the demand increase in Europe. And the gross profit margin is still in the range that we have set for it's at 20.3% for the past 9 months. And the presentation that we provided in the past about our marketing and promotion push. On the right-hand side, you can see the promotion that we have had, whether it's with Petit Navire in France or Moray Bleu in Italy and Chicken of the Sea in the US. And on the next page, our frozen business, this is a combination of many segments, and there are 4 of them. The first is the frozen shrimp, and the second is the chilled salmon. The third is the feed, and the last is others. And the sales in the third quarter were at 10.334 billion Thai baht, increasing 5% year on year, mostly due to the sales volume. As our executives mentioned earlier, the sales revenue and the volume have increased, and this is due to the TFM feed. They have strong performance results, and they have recorded an all-time high in their sales volume and their sales value. And we are still seeing increasing demand for the frozen shrimp in the US as well. If we take a look at the gross profit margin for us in this quarter is at 13.8%. It has increased 1.8% year on year. And this is mostly due to the feed business that we mentioned earlier. If we take a look at the chilled business, the chilled salmon, it also has strong performance. If we take a look at the performance that does not include the food, you can see that the gross profit margin for the frozen business and the chilled segment is still favorable, very favorable. And for the past 9 months, for the frozen business, it's gone down by about 5% year on year. And this is mostly due to the OEM customers in the US, because the price of shrimp in the past 9 months has increased significantly by about 12.4% year on year. And if we take a look at the branded products, we're seeing an increase in the sales volume. The gross profit margin is at 12.7% for the first 9 months of this year. And this is an all-time high for the gross profit margin for the past 9 months for for the frozen business unit, and this is mostly driven by the feed and the chilled business. Next, the pet care in the third quarter. Pet care business in the third quarter has sales at 4.624 billion Thai baht, increasing 6.2% year-on-year, despite the impact from the foreign exchange. And in terms of the sales volume, you can see that the pet care business has done very, very well at about 10% year-on-year. And this increase is due to the US market and also the market in Europe as well. In terms of the European market, if we track the past period, there has been a drop in pet care, but ITC has a strategy to expand its sales in Europe. And this quarter, they have been able to achieve the strategy that they put in place. Looking at the product mix, you can see that for the third quarter, the premium product mix has increased compared to the same period last year, up to 55.1%. And this is another key driver for the pet care revenue increase. The gross profit margin is at 25.8% for the third quarter. This is more than the target that was set at 23 to 25%. Despite the drop year-on-year by 4.8%, we'd like you to know that in the third quarter of last year, there was a benefit for the pet care business from the inventory reversal. If we exclude this inventory reversal, then the gross profit margin declined by only 3.1%, and this is due to the pet care business unit having to provide support to their customers because of the tariff impact. As for the past 9 months for the pet care business, we have seen an increase of 3.3% in the first 9 months, thanks to increase in the volume by 11% year-on-year. And this is driven by the increased demand in the US, while the gross profit margin is also very strong at 25.3%. If we take a look at the last business unit, which is our value-added business, you can see that the sales is 2.296 billion Thai baht, dropping 16% year-on-year. The main element for the value-added business, there are 4 main elements. The first is the value-added products, which are the ambient and frozen. And the second is packaging. The third is our ingredients. And the fourth is byproducts. And the last is others. In the last quarter, the sales that declined for the value-added category are from the value-added products in the US for the most part. If we take a look at the European market, we can see an improvement in terms of the value-added products. Nonetheless, if we take a look at packaging, the sales have gone down, and this is in line with the ambient category. The sales volume for the value-added products went down by 10%, and this is mostly due to the byproducts and the packaging and value-added product segments. And our gross profit margin has improved a bit compared to the same period in last year, up to 25.6%. And in the past 9 months for the value-added business, the sales have declined by about 10% year-on-year. And at the same time, the volume has increased a bit by about 1%. The reason for the drop is every segment except for the ingredient business. And the gross profit margin is still in a positive range at 26.6%. And next, I would like to pass things back to Mr. Tirapong to provide the outlook for 2025. Thank you. The full year 2025 outlook, there isn't much change. The sales growth we may have to adjust it downwards a little bit from before we gave guidance of -1% to -2%. But at this moment, we are looking at -5%, so we want to adjust it to -2% to -4%. We expect an improvement in the fourth quarter. And the gross profit margin remains the same at 18.5 to 19.5%. SG&A is also the same at 13.5 to 14.5%. We might see a bit increase in this, but it won't be that different. There isn't anything that's exceptional to worry about. And capex is at 3.5 to 4 billion Thai baht. And the effective interest rate, there is no change, and the dividend policy remains the same. We will continue to pay at least 50% twice a year. And the presentation has come to an end, so if you have any questions, we welcome them. I think what's important to remember is what an indicator is the gross profit margin. If it's improving, this is because it's the COGS reduction that we're working on. It's the SG&A. We'll see if it will decrease from 14 to 13.5 or not. We have to monitor this as well. I believe that there are indicators that can provide clarity. In the past 2 to 3 years, if we had not taken this action, our margin would probably not have improved because of inflation, which has increased significantly. And in some places, the currency is at the core, like in Ghana. In Ghana, if we had a stable forex, but it's gone down by 10%, remember, but their forex has gone up and their money continues to appreciate by 40%. And this is something that exceeded all of our expectations. So there are so many other factors at play, but overall, you can see there has been a drop for us, a lowering for us. And the ambient factories there's a standardization. We have them all aligned under one line. Rather than everyone doing their own thing, we have a more standardized procedure. If there are no other questions, then we would like to thank you all for your interest, and we hope that we will continue to receive your support, not just your votes for the awards, but it provide us general support as well. Thank you so much.